Good afternoon, everybody, and welcome to our final session for the Accounting and Finance Show. I'd like to please ask my speakers to turn on their cameras and unmute themselves. Hi, everybody.
Hi there.
Hi, guys.
How's everyone doing today?
Wonderful, thank you.
Thanks.
Very well, thank you.
Fantastic. I'm just going to hand over to Lawrence, as he will be the moderator for the final panel today. I hope you guys enjoy it. I'm looking forward to it.
Brilliant.
Thanks so
much, Molly.
Thank you very much.
Great. Welcome everybody to today's session. As per the title of this discussion, we have various perspectives on the topic of AI and the value that it could add to the accounting profession. My name is Lawrence Rao. I'm an engineer, the engineer that's referenced in the title of the session. I've worked primarily in financial services for most of my career, with corporate jobs at Netcore, Discovery, Transaction Capital, before starting my entrepreneurial journey. I'm currently the CEO of Emerge, which is a technology company that builds AI solutions for businesses. I'll be moderating today's discussion, and I've got a whole lot of questions planned for our panelists. But please, if there are any questions that we haven't asked, that you have an interest in and would like to hear from our panelists on that, please do send them through, and Molly will share them with us as they come through. Great, so let's get started. I thought that what would be valuable is for everybody on the panel to give you a little bit of a background on their own professional careers and how they find themselves here. I'm sure everybody is intrigued to know who the accountant is, so we'll get to that in a moment. But perhaps, Danny, if you could start, Russell, then maybe give us a little of your background, and Sahel, if you could go next after that.
Sure. So thanks, Lawrence. So I'm Danny Saxenberg. I'm the actuary in this discussion, and so I'll be responsible for all the bad jokes. And I don't so much suffer as much as enjoy having career ADD. So I qualified as an actuary a number of years ago, but I left the actuarial profession in 2002 just to see if I could do different things. I really struggled with the actuarial profession. It's a great profession, but it just wasn't for me. And so I started looking for all sorts of different analytical projects. And very early in my career, I came across a client who wanted me to build a credit scorecard for them. It was exactly my kind of project because I'd never done it before. And it was a great opportunity to research it from first principles and figure out how to approach it. And it was back then that I discovered machine learning, and it was love at first sight. So we still built credit scorecards, but what really attracted me to the AI and machine learning space was the idea that I could indulge my career ADD, and it was an opportunity to work in a range of different professions and a range of different industries. Provided they had data, which is pretty much everyone, then there was an opportunity for the machine to come add value. And so I worked on my own for a number of years, 10 years or so. And then Lawrence and I, who are old friends, realized that there was actually a great opportunity for us to work together. So I'm more of a pure mathematician. So I didn't have an approach that was good to business, because from a modeling point of view, as long as the solution existed, I was happy, and I had all my intellectual satisfaction, and I didn't really care if it was implemented into business, but that's obviously not good for business. Lawrence is an engineer, process engineer by profession, and is really good at taking these models and making sure that they generate business value. So Lawrence and I started Emerge in 2012, and we're still in it and hoping to change a couple of industries along the way.
Great, thank you, Danny. Russell, can you maybe give us some of your background?
Fantastic. Hi, everyone. My name is Russell Izakov. I'm the current lead at Letsema Consulting and Advisory for governance, risk, and compliance. I've been a management consultant for a number of years, and I guess that's where I fit into the conversation as the management consultant. I've worked across multiple industries, I think, in my career, really kind of specializing in financial services. I've worked quite extensively in financial control at one of the top or the top 4 banks in the country. And in my experience, I've also been kind of able to get some global banking experience across kind of the board. So worked with an Australian lead bank within kind of the compliance space. And yeah, I'm excited about the discussion today and getting it started.
Great, thank you. So Hal, a little bit about your background, please.
Yes, thank you, Lawrence. And as you have guessed, I'm the accountant in the title. So my history is a bit shorter than the others due to my age. So I am a chartered accountant by profession. I did my articles at a medium-sized firm in Johannesburg, where I audited across a number of industries, including mainly in the ICT and construction industry, and exposed to manufacturing and various other industries as well. I did a short stint in the States on a secondment program, where I also got to embrace the auditing world in the United States and see how that is running as well. And then I left auditing to go into consulting, and now I'm a consultant in the GRC practice at Litema Consulting and Advisory. So yeah, that's my story.
Brilliant, that's great, thank you. Maybe just a little bit around the auditing piece. So you said you left auditing after you finished your articles. Can you give us a little bit of insight into why you moved on?
So yes, auditing, first off, auditing was a great start for any CA's career because it gives you real exposure to the financial industry and financial processes at a variety of different clients. And it gives you a great work ethic and diligence because you put in the long hours when you're an article clerk. So the reason that I left is, like Danny said earlier, I've also suffered from a bit of career ADD, and I wanted a new challenge, and I was always interested in problem solving and getting exposed to more elements of the business besides finance. So that's why I ventured into consulting, and especially concentrated on digital and GRC consulting. So trying to marry my financial experience with also the consulting skills to better innovate in the space.
Brilliant, thank you. Great, thanks everyone for your background. Maybe a little bit more by way of introduction and background is, I suspect there'll be varying levels of understanding of what AI or machine learning is from our audience. So maybe just for purposes of this discussion, Dan, if you could give us a bit of a working definition, so a sufficient kind of overview so that we can use that in the context of the rest of the conversation.
Sure. So I'm not going to give you the official definition because I don't think there is one. I'm still trying to work out what AI is myself. But in general terms, what we mean when we talk about AI or machine learning is when we try to train machines to recognize patterns from data. Much the way we do, and I say we as humans, we're very good pattern recognizers. So as an example, we're very good at image recognition. So we can drive places and we can recognize the car ahead of us and the road and the pavement. And we can hear from the sound of the engine when it's time to change gears up or down, as the case may be. So those are types of image recognition, and image recognition is one type of pattern recognition. But we're also good at other types of image recognition, well, other types of pattern recognition. So for example, if you speak to an experienced accountant, they could look at a set of financial statements and instantly pick out salient features of the accounts and tell you whether the company's doing well or badly, or whether any particular line item looks funny or everything looks reasonable. A doctor can look at a patient, an experienced doctor can look at a patient and work out whether often they can get a diagnosis or they can spot if there's something wrong. So all of these are types of pattern recognition that we develop in the course of our lives through experience and repeated interactions. And given that that's how we learn how to recognize patterns, machines can do similar types of things. So we now have machines, say, aiding doctors in diagnosis, computer-aided diagnosis. But the truth is we do other types of pattern recognition. So as an example, I always like to give the example where you get a person who you've just met for the first time, and after just 1 minute of talking to the person, I could ask you, you've just met Bob, do you trust Bob? And many times you'll have a firm view one way or another. And the reason I bring this example up, it's not just because your decision is baseless, but the reason you can make that decision is because you have very well-defined algorithms in your brain which pick up on a lot of different and subtle types of data, and you use that to put together a decision about whether somebody's trustworthy or not. And we're not necessarily privy to our own thought processes, but we do have well-established algorithms which serve us well and help us to survive and function in society. we get machines to recognize these types of patterns also, but instead of doing it from direct human interaction or repeat looking at financial statements or patients, we get machines to do this from data and databases. And as far as humans are concerned, we're pretty rubbish at that, because if you take a look at the average type of database that a bank or insurance company or somebody like that is maintaining, they typically have millions of lines, thousands of columns. It's really a huge amount of data, and the human brain simply hasn't evolved to be able to look at, extract patterns from that kind of data. So what we do is we try to get machines to look at that kind of data and see if it can extract usable patterns, which we as humans wouldn't be able to do. And it would be stuff like, can I give so-and-so a loan? Are they creditworthy? Or are they likely to close their account or cancel their policy? Or would they be interested in buying a particular product? These are all types of applications that people are using machine learning for, where they're getting this information and the machines are making these decisions off the mountains and mountains of data that have been collected by businesses around the world today. It's become incredibly cheap to do it, and everybody's doing it. So there's been just a gigantic explosion in the amount of data collected. And part of the reason for that is because machines are now actually able to extract value from those databases, whereas we as humans would struggle to do that. So in short, just as a working definition, we're talking about getting machines to recognize valuable patterns from data.
Great, thank you. And I suppose that can be applied to many things, as you've mentioned. So I think a good place to go next would be to get a little bit of insight from Russell, who's spent a bit of time in governance, risk, and compliance, and probably has a fortune of stories to tell us. Maybe, Russell, if you could just give us a view of some of the major business challenges that you see facing finance and accounting and the profession as a whole, and how you see that coming out in the work that you do, to give us a little bit of context for how we might be able to marry AI and the financial / accounting profession.
Sure, Lawrence, and thanks for that, Danny. I think that was really insightful. So I think, based on kind of a lot of the exposure we get to our clients, and specifically around the corporates and your large organizations, there's quite a few problem statements that are common across these clients. And I think a lot of resources are spent trying to find solutions for them, and the optimal solutions, especially within the contextual relevance of that industry. So I think the first one that I would really like to touch on is, I think a lot of almost group finance and finance professionals, and specifically CFOs, struggle with the balancing act of kind of their traditional roles versus the new kind of role requirements that have come out in this digital age. There's really that kind of trade-off between spending time and resources on operational issues, and really trying to get their kind of department to be rather on the leading edge, and being able to leverage these strategic products that are now in the market. So I think that's been kind of one that I think most organizations kind of grapple with. And within that, I think a lot of organizations aren't really that aware, and specifically within group finance, of their digital direction and digital maturity. And that often becomes quite a big issue when there's a lot of these buzzwords that fly around, and people have spoken about blockchain in the past, and people have kind of get very excited when they hear of 4IR. And really, I think a lot of the time they have almost the basics to get right before they can go and tackle some of these new technologies, or they wouldn't really understand what that technology would solve for. They hear other organizations using it, and they immediately think that this is something that they need to plug into their business. I think two of the biggest issues that I think really come out within a lot of the work we do is around, and specifically around the banks, is a legacy kind of data issues and technical debt. There's, especially from a GL perspective, the companies have been using a certain system for many years, accumulating more and more technical debt over the years. And really, as soon as a new piece of kind of tech or software becomes available, they're quite keen to take on the new capabilities that it brings with it. but they aren't really aware of the issues that their legacy system would kind of present within trying to implement a new solution. So I think that's one. And the other that I'd like to speak to is really the abundance of data that sits within these finance divisions between your ledger and your sub-ledger, and really being able to pinpoint and pick up risk in an agile and quick way. I think a lot of these organizations struggle with that. So maybe from, I don't know, Suhail and Danny, you could really give us an idea as to, from an application perspective, how you think AI would kind of solve for this, and maybe Danny more specifically.
Great. Okay. So maybe just before we get into the solution, let's just be sure we completely understand the kind of constructs of those problems. So
Sure.
If I hear correctly, the one is around a lot of data and how to get through and manage through lots of data. But the second one that I heard you speak to was around the fact that with legacy systems, there are inconsistencies in that data, anomalies in that data, and then challenges around how to use the data appropriately.
100%.
Is that correct? So if that's the case, Danny, do you want to maybe just talk about how you think AI might be able to have a contributing piece towards those things, if at all? I'm not sure that, I mean, it would be interesting to hear your thoughts on that.
So, with regards to the first one, so part of the challenge with moving from a legacy system or whatever kind, whether it's an accounting system or any other type of database, is there are quite a few. So one is the maintenance of the integrity of your data when you move it across, so that your data isn't just replicated, but it actually goes into the new database in the place that it's meant to, without any corruption. And then a second concern that there is that, so corruption as you move it across is one particular one. But a second one is actually whether the move to new technology is actually going to be worthwhile at all. And I should, as somebody who's talking about AI, I probably should be, you wouldn't expect me to be the one who's questioning the value of new technology. The fact that something new doesn't necessarily mean that it's better. And in many cases, many of the new technologies have actually resulted in harm or loss. So I spoke at a conference in New York about 2 years ago on AI projects in financial services. And one of the other speakers had an amazingly interesting slide. He had surveyed 2,000 4IR or AI projects in the financial services industry in the United States. And he had found that more than 90% of them had a negative return on investment. And so, and I fully believe that that's very much the case. There are lots of reasons that could be the case. One of the reasons is specifically there's a disconnect between business people and AI people. So often, if you take a look at the profile of the average AI person, it's somebody who's very adept at computer programming and statistics and maths and neural networks and that type of thing. But often there's not much training in terms of business requirements. So what you find is that AI practitioners have a tendency to want to build the shiniest, fanciest AI, even though it's not necessarily adding business value. Conversely, you have business people who have a firm awareness of what business can do, but often don't have an awareness of what AI can achieve and how it can help them. And so you have these two groups of people often talking past each other and not get into optimal outcomes. So I think as a first step, what's worthwhile in the move across is whenever one wants to implement new technology, then there's a requirement for first of all to assess over there whether it's going to solve the problem, and that requires a specification of the problem up front. So one has to work that out first. And then once you know what the problem is, the next question is this actually going to solve it? So that's a critical step, which if you skip over can really lead to a loss of money. And it's really not worthwhile. But in terms of moving things across to new systems and new databases, that definitely can have tremendous value, provided you don't mess up your data when you do that. And this is also one of the major applications of machine learning. So when we talk about anomaly detection or fraud detection, if that is a concern. So first of all, in general, even in the preparatory stages of machine learning models, one often spends a lot of time looking for anomalies. So this is an incredibly well-developed area. where if you can find things that look funny, again, whatever the definition of funny is, but things that stand out and aren't meant to be there in are very different to everything else. This is something that machine learning has a ton of work on. And again, it's not even in the machine learning part. It's often in the part before the machine learning, which is in the data preparation stage. Dozens of methods which deal with anomaly detection and which help you pick up things which look different and ought not to be there. But then separately, if you have specific mistakes that you happen to have found in the past, you can actually explicitly take those mistakes, or if one does discover fraud or financial crime in any particular way, one can take those examples, feed them into a machine learning model, which you train explicitly to learn to pick up things that look funny, not just for the sake of anomaly detection and data preparation, but specifically to find errors or to find financial crime or fraud or that type of thing. And these work ridiculously well. It's actually spooky how well these models work. One of the reasons I've loved machine learning so much, it's now my 18th year, 19th year in the field, and I'm still regularly surprised by how well these models work. It is actually freaky how well these things can pick up transactions, single transactions amongst millions or billions of transactions or journal entries, and flag them and end up reducing your workload so that you can actually focus on things that need human attention, as opposed to having to trawl through the overwhelming majority of transactions or journal entries, which actually are 100% fine and routine and shouldn't actually distract you and take up human time. So I think there's a huge application in this particular area for spotting data corruption or spotting data errors or spotting data anomalies. Really one of the use cases that was almost custom built for machine learning.
Right, wonderful. Russell, did you want to add something?
Yeah, I think just based on what Danny's saying, I think you could almost then summarize the two applications of AR within the finance and accounting space, if I understand correctly, into AR for detection and AI for prediction. So detection, trying to find those anomalies that you're speaking to now, and specifically from an audit perspective, you would then be able to run those old audit findings through that training program that you mentioned, and then be able to see how it could pick up other anomalies within those data sets. And then almost AR for prediction, which is kind of making sense of the complicated relationships that exist between the different data sets.
Brilliant.
Yes, sorry, just to expand on that a little bit. I'm sorry to steal the time, Sohail.
We have to be hearing your voice on this.
But the one thing that machine learning does particularly well is look at interrelationships. One of the reasons it does better than humans, particularly at pattern recognition is in data, is that we don't handle huge dimensionality very well. So we might say define a rule to find a funny transaction using 3 or 4 measures. If this happens and that happens and that happens, then look at that transaction or flag it. Or in sales, we might say segment sales by age, gender, and geographical area. That's already 3 dimensions. We might struggle to do more than that. And the truth is, even if we can do more than that as humans in our heads, it's not really that useful. We don't really latch onto rules or heuristics that involve much more than 3 dimensions. Whereas the machines can quite happily look at the interaction of hundreds, if not thousands of variables all together at the same time along different ranges of each of those variables and learn what patterns there are in there. And then as a result of that, be able to flag the ones that don't fit into these patterns, which explain nearly all of the other data. So it's a wonderful opportunity to where it can do better than humans and where we can use it as a tool. So in terms of the detection, it does really well. And then in terms of prediction also. So as we discussed earlier, so the issue over there in terms of being able to predict what's going to happen so that you can make guided and educated decisions about your financing decisions. This is also an area where machine learning comes into its own, because the systems and businesses where we work, they're very complex and they're in an economy which is very complex. And so again, so many interrelationships, it's hard for us to actually make sense of everything that we're seeing. But again, another use case, almost custom built for machine learning, where it's able to unscramble the egg and be able to delineate all of the flows that are impacting that particular feature that you're interested in investigating, and helping you make really guided decisions and educated decisions about things that are going to happen in the future.
Great, thank you. Russell and Danny, your explanation of how you think the opportunity lies within finance led us perfectly into the next topic that I'd actually like to discuss with Suhail, which goes back to his experience in auditing itself. So I mean, I have a very basic level of understanding of what is done during 3 years of articles. I do have a brother who is an accountant, so I did watch some of the processes through him. But maybe, Sal, just to talk through that experience and how you think that potentially could be beneficial. So Russell started talking about finding anomalies and finding kind of particular transactions that are of interest. I understand that's a big part of what is in the auditing process. Maybe you can talk a little bit about that and explain that to us, and in the lens of AI or machine learning.
Yes, no, thank you, Lawrence, very much for that. And I'm sure when you observed your brother in his articles, there was many moments of frustration in that as well. So to break it down, at the heart of it, auditing is a data validation exercise. And just to kind of unpack the AI lens on the audit profession, and I'm sure many of the audience members can also relate, I'd like to pick 3 main problem statements that I think accountants and auditors alike all face. And the one that I particularly faced in South Africa and abroad is when it comes to coding or mapping accounts from different databases or different accounting software to fit your audit software, which is a rigorous process that you do over and over again. And it kind of leads you to the question that there has to be a better way of mapping and sorting these accounts. And that's where I feel that technology can play a big role in that as well. And then also looking at a ledger when you have, as Danny mentioned earlier, a million transactions in Excel dumped on you, and you have to sift through this and recognize the anomalies and the fraud detection element into that as well. So that's the key areas where I see that the auditing profession, where it's something that's a pain point for many auditors and accountants currently, and something that we always looking to see how we can improve in order to make the audit more efficient and more effective. And also when it looks into sample documentation, so AI can play a role across all the stages of auditing, where audit process, where it be in the planning, the engagement, or the conclusion part of the audit. So to give you an example, when somebody is documenting a sample, they've selected a specific transaction from the GL, and they have to trace this to the source documentation. So I take it from personal experience, article clerks can spend days on end just sifting through transactions and matching it to invoices and matching it to contracts, which becomes very repetitive. And that kind of ticks the key boxes to where machine learning and AI can really play a role, because these are processes which can be automated and can allow the auditor and the accounting professionals to apply further insights and apply their skill set to more important things in the audit, like assessing the risk identification and also seeing if it's IFRS compliant. So within the auditing process, which is a very valuable process within the financial ecosystem, there is multiple uses for AI and applications to enhance the profession, and also to migrate from testing a sample base of the general ledger into actually having reasonable assurance or a higher level of assurance across 100% of the data set. So yeah, from my personal experience in spending long nights sifting through invoices and contracts and purchase orders and looking for payments on bank statements, it becomes a long repetitive process, which I feel very strongly that AI can play a huge role in it and give clerks a lot of time off, and so they can see their families and things like that, and actually enjoy their hotels.
So if I understand correctly, you see it as an opportunity to focus the attention on the right places for auditing. So often there's a sample, and the sample is used as a proxy for the bigger data set. But the opportunity to rank, order, or prioritize the line items to investigate in more detail is an opportunity that jumps out at you, and that's, from what I understand from you, the primary place where where time is consumed. So a big chunk of the audit is around researching, going through the data, getting the data ready for that audit.
Yes, because ultimately in any audit, it's a random sampling process where you selecting from the general ledger and you also sifting through the general ledger to see what looks like a risky transaction, what looks unusual. So that inherent training you have in your brain and using your professional skills to identify, okay, there's cash movements where there shouldn't be cash movements, that you select. But due to the limitations of being so much data given to you, you cannot always find every single anomaly. So like you said earlier, with testing a sample, it's a representation of the population, but I really see technology playing a part where you can actually have further comfort on the 100% of the population and not only just a smaller subset of it.
Great. Danny, Russell, if you want to jump in and talk through your thoughts around the auditing and how AI can help.
So I'd just like to also add on to that. So I think Sohail mentioned now the ability to cover a much bigger or population size or sample size instead of just doing a percentage of an audit on a larger population, the ability to actually consume a much bigger data set a lot quicker. I think another thing to add on that is the ability that we've kind of been investigating in terms of covering 100% really with regards to data that sits outside of specific sample or target variables. So one of the things that we kind of pick up a lot is that, the companies that apply audits have specific thresholds that they look at in terms of materiality. And that's really based on someone's ability to be able to pick up almost the bigger chunk of that audit, but there's still a lot that's left out. And kind of being able to get 100% coverage of data is a huge, I think, value add to an audit. And really the ability of someone to be able to include other data sets that might not be included in your typical analysis and look for trends that might present anomalies within the audit findings is a huge value add. So I think that's that one element. And I think Sohail touched on the human error element quite nicely. The other thing I just wanted to also bring up is that traditional audit is really rules-based. And, that being said, there's a lot of opportunity for kind of staff of companies and external kind of your fraudsters to be able to understand how their homework is being marked. So from an understanding of how an audit takes place, you could very quickly try and almost move within the boundaries of those rules, but on things that might not be relatively kosher. So I think one of the things that really I see a massive value add in as well from an audit perspective is the ability to really circumvent just that rules-based approach and really apply a much broader way of thinking and a much broader much broader data set that is kind of almost gives a much broader understanding of what's going in within the company's financials.
Great. Dan, I'm sure you've got something to add there.
Yeah, so in no particular order, so I probably should try go in order, but I don't remember the order. But so I'm just going to talk about what Russell just finished talking about, and that is when it comes to organized crime, rules-based ways to stop in crime. Whether it happens to be standard audit procedures or whether it happens to be, say, a bank having rules for flagging fraudulent transactions or that type of thing. The problem, so that works those types of things work pretty well for what I'll call your ad hoc criminal who's just trying to take a chance on a particular occasion. But where you've got organized criminals, so the crime does pay if you do it right, apparently. So if people are in the business of crime, they want to make money. And if your rules are frustrating them in a particular way, so they will adapt to make sure that your rules don't stop them anymore. And so what we found particularly, I mean, we've done a lot of space in banking fraud. And so most of the banks would have their particular set of rules that they were used to flag transactions. Organized criminals had ways of getting hold of these lists And as a result of that, they were able to customize and tailor their transactions so that they sell through all of the hurdles without actually raising any alarm bells. And the truth is, if you know how these rules work, they might get updated every year, every 2 years, and they're mostly cosmetic changes. There'll be one extra rule on an entire pamphlet of rules. And that doesn't really change the game too much for criminals. So one of the features of machine learning, which is wonderful about this, is that it recognizes patterns that are so complex that humans actually can't understand them. And so literally, as much as I like to code up these algorithms and they learn amazingly, at the end of coding up this algorithm, I actually can't tell you what the machine has learned. It is an expert, it's doing really well, and finding all of these transactions that are in fact fraudulent, or journal entries that are in fact fraudulent, but I can't tell you what the machine has learned and how it's picking it up. It's a total black box, even to me, the coder. And so what's nice about that is that it actually ends up being very effective, but also it makes it unleakable. Even if it were to be leaked to organized criminal market, it wouldn't actually make any difference because it is inscrutable. It just works really well. And also what's nice about it is that it continues, insofar as you build a feedback loop where you allow the machine to keep on learning from new data as it comes in. These aren't the types of models that change once a year. You can actually have them change in on a weekly, daily basis if necessary. We've never found one that needed to be updated daily, but it actually keeps up with criminals. And as their modus operandi change, you're able to make sure that the machine keeps up with that. So it's a wonderful opportunity. And in the audit space, where you've done so much have formal rules, but formal procedures, which the industry as a whole is using, that's also an opportunity for criminals to try tailor their transactions so that it gets missed. And so machine learning can be really great over there, because you're in a large sense throwing a wild card into the mix where it's inscrutable. And there's no way to tailor your transaction that will avoid that particular mechanism for picking up fraud. And coming back to what Sahel was saying, there's an immense amount of repetitive work which really lends itself to automation. So whether it's an issue of, say, tracking invoice transactions all the way back through to invoices, this is the type of thing, particularly if the invoices have been digitized, this is the type of thing that could be done hugely rapidly, in which case your sample size can grow, because the aim is eventually to be able to check 100% of all transactions in invoices, but that, I don't know how realistic that is for a long time, but certainly you can vastly widen your sample size. But more than that, instead of it being purely random, you can certainly have that, but then you can also have the machine focus and target you on things that actually ought to be investigated. So you'll find a much higher proportion of mistakes or errors or inaccuracies in the financial statements, which will allow you to hopefully pick up systemic errors. There might be, say, when I say systemic errors, there might be one particular data capturer who spends too much time looking at the phone while they're meant to be capturing things. That could be a systemic error, where that person, you have a much higher rate of error coming from one particular person, or one particular data capturing methodology, or one particular system, which you might not have picked up if you'd only, say, picked up one error that arose from that particular systemic generator of errors. And obviously you can pick up dishonesty if it's there. So a huge opportunity to take a lot of the work, which I don't know if anyone enjoys, the repetitive nature and the late nights buried in boxes of invoices. There's a real opportunity to automate a big part of that, and not only to automate it, but to actually achieve a better result, where you're able to get much greater coverage of all of the transactions and reduce human error.
Right. I remember when Amazon first came into South Africa, there were a whole lot of transactions that were not approved through some of the banks because they were both overseas in dollars, and that's the rule-based approach we've seen to a lot of things. An overseas transaction is higher risk for some reason, or perceived as a high risk. These are all the rules that often get in the way of handling some of those fraudulent pieces. Okay, so we've dealt with a lot of the conversation around opportunity for accountants in the accounting profession. We've spent a little bit of time on obviously general use cases and some around the auditing piece. I do want to encourage people listening, if they've got any questions, please to send them through. Unless there's anything else anyone wants to add around that piece, I thought that what might be nice to do is actually jump onto another part of the accountant's role and function, which is around cost containment and managing the costs in an organization. Anyone want to add anything on the overall kind of accounting role before we move on to that? I don't know, Russell, if you had something to say?
Yeah, I think it was more of just a question to Danny. You know, one of the things that kind of is required from an audit is to really understand the methodology or principles applied in terms of getting to a specific outcome or specific balances. With AI, and you kind of mentioning that black box that can occur in terms of the machine learning actually picking up trends that through its training that the normal human eye wouldn't be able to pick up. How is there a way to audit AI in it kind of, so how would you audit a system like an AI system, and what is there any kind of almost a way that you think that would need to be tackled?
So it is a double-edged sword. So in the industry, they use two terms. They talk about understandability and explainability. So in terms of understanding what AI is doing, that's very easy to do. So I can tell you what steps the AI has taken in order to learn its patterns. And I can tell you that it does it 25 billion times, but in terms of actually, but that doesn't make it explainable. So in terms of the actual patterns that are discovered at the end, that's not necessarily going to be the type of thing that I could actually say to you, it learned it from there and it added that together and you put those parameters together and that's how it decided that this was suspicious. But what it does help to do is, when it's demonstrated that it does pick up fraudulent or incorrect transactions at a rate higher than you would get through just random sampling, you're at least able to show that it does that. You can show that it does actually achieve the result that you were aiming it for, and so you can demonstrate that it works way better than random sampling, and that in fact is one of always the benchmark tests that you use when you're assessing how well the machine learning model works. So in terms of so it's very hard at the moment to explain machine learning. It's one of the big topics at the moment in the industry. Can you come up with explainable AI? At the moment, not yet, but it is one of the things that the US military is working on. I personally don't think that they'll get there because the whole point of machine learning is we're using it to do things that human brains can't. So if you can dumb it down to the point that a human could understand it, you've lost a lot of the predictive power of the model. That said, though, there are certain methodologies which do lend themselves to explainability a bit more. So for example, you'll get a lot of machine learning models are based on decision trees, where it will say, look at that variable, and if it's bigger than that amount, go down that arm of the tree. And if it's bigger than that amount, go down that branch of the tree, and so on. And you get these cascading levels of decisions. You can look at that and you could check them out, but it doesn't necessarily mean that you'd be able to make sense of why it chose those points to split your decision and why that actually leads you towards fraudulent transactions or incorrect transactions. It won't necessarily get you there, but you could actually check it out in theory. I just remembered, though, the one thing that Sahel mentioned at the beginning of his discussion was the mapping of accounts in the client's accounting system to the auditor's accounting system. That also is another example of where if the machine can't do all of it 100% perfectly, I'm almost certain we could get the machine to do 99% of them perfectly and actually create those connections and just leave it to you to eyeball and check, as opposed to having to manually connect each of those accounts or map each of those accounts one to the other. So I think that would also be another wonderful application of machine learning in this space.
Great, thank you. Okay, so maybe let's go on for a little bit. We've got about 15 minutes left. I think let's talk a bit about the concept of cost containment. It's obviously the finance department has a great role to play in helping a business stay as profitable as possible, and a big part of that is making sure that costs are managed. So I thought that it would be valuable for us to spend a few minutes on the sorts of things that might be possible from a cost containment perspective. I I'm happy for Sahel and Russell to maybe put out a couple of suggestions if you've got, but I know, Dan, you've done quite a bit of work in this space. So I mean, Sahel, unless you want to jump in there, maybe let Danny have a start.
Yeah,
Great.
I think Danny can have a start.
Great, and then Russell and Sahel, you can jump in afterwards. So Dan, do you want to maybe talk a little bit about some of the places where AI can have a role around cost containment and managing down some of the waste and excess that could be in a business?
Sure. So so a big part of costs, companies spend money on a bunch of things, but not all of the things that they spend money on achieve results. As an example, say client acquisition or prospecting. That's for many businesses a huge expense that they go to, but a lot of it, not every cent that they spend on that particular endeavor results in a new customer being acquired, or companies might spend a lot of money building products or assembling products for sale based on what they think will actually be demand in a few months' time, but it doesn't turn out to be the case, or they might underproduce. So in all of these cases over here, machine learning is a wonderful opportunity to use these patterns to be much more efficient and to make sure that there's much more return on the effort one goes to. So as an example, in say customer acquisition, if I were to say there's a half price special on plane tickets to London next week, which of your friends would be interested? At the moment, because you know your friends, one or two names have immediately sprung to mind. And a huge number of your friends are definitely not there. And in those one or two friends that sprung to mind, you've thought of people who you know want to go to England, who have the flexibility of schedule that they could actually take time off next week, are spontaneous enough to undergo an overseas trip next week, and all of those things. You've gone through all of these hurdles in your head implicitly without actually even thinking about them, and you're probably right. Whereas if I have no system for that, the best I could do is for you to hand me your phone and for me to dial through your phone book one person at a time, which is obviously far less efficient than what you would achieve, because you happen to have recognized the patterns around your friends. And it's the same thing when it comes to prospecting for clients, being able to do that much more efficiently. In the call center business or prospecting business, you're considered to be really good if only 9 out of 10 people tell you to go somewhere. And that's a soul destroying job, but there's a huge amount of wasted effort over there. So the opportunity over there to be much more focused and just speak to people who want your product as opposed to harassing most of the people you speak to, that's a great opportunity. When it comes to company expenses, it's not just in acquisition, it's also on the retention side. Can you actually, you've spent a fortune of money getting your clients on board, can you actually get them to stay? Can you work out when they're going to leave and what to do to get them to stay? That's another opportunity to save huge amounts of costs. When it comes to risk, so clients often represent risk to your organization. If it's a bank, it could be credit risk. If it's an insurance company, it could be insurance risk. Whatever the case is, you often have risk entailed to your customers. Can you actually work out what their risk is accurately and how to get them to behave in a way which is good for them and for your business? These are all great opportunities. Another thing which also is quite obviously the fraud we've spoken about. That's a massive expense. But there's also an opportunity, by the way, to improve customer experience. It's not just about reducing expenses. It's about improving experience. But we'll talk about that perhaps just now. The one last thing I wanted to talk about is if you actually go through a finance department is making thousands of decisions over the course of a financial year, and they're acting towards deploying the business's assets optimally. The question is, when you make that kind of a decision, can you actually work out what impact it makes on profitability? It's very hard for us to do that. We have guesses. And that's kind of our heuristic, but in many cases you can actually get the machine to say that actually these line items, even if you were to do away with them, would make no difference to the revenue of the business. And it's very good at recognizing particular expense items which actually make no contribution to the business. So another great opportunity for machines to be able to trim expenses or make sure that the expenses that the company does have are targeted to those things that will generate the biggest returns.
Great. That's very valuable. Thank you. Russell, anything you want to add around that?
No, I think just to mention, group finance is really a cost center for an organization. It's not a revenue generator. And I think what Danny's speaking to now is trying to almost marry business and finance and get a lot better and get finance to be a strategic enabler for the strategic enabler for the business. So being able to leverage the data that you have as an organization and be able to make much better decisions. And I think that's what any finance division ultimately aims towards. So yeah, I think that's fantastic.
The hell, as an accountant, anything you want to add there?
Yes, so definitely Russell's and Danny's points from an accounting perspective really resonates, because ultimately as an accountant, you'd like the best tools to make your decisions off. And with adding technology into your business and using AI, that will give your finance department the best equipment to make the best decisions and the most optimal decisions for the business, which will ultimately result in cost savings for the entire business as a whole.
Great, very good, thank you. Okay, so what I thought we could do a little bit now is deal with something that I think is often a bit of a challenge, and that's just once you've got a piece of technology that could add real value to either an operational process or a financial process or an auditing process or a data anomaly process, I suppose some of the questions, and it's not only a question around AI, this is just how do you do that? What are the potential challenges and blockers that could get in the way around implementing this into an operational construct? So I mean, even Russell, you mentioned about blockchain and those sorts of things. They have so much potential to offer. The question, I suppose, is why do we struggle so much to get value from them? As a management consultant, I imagine you've had this question asked of you many times, and you've probably got a good idea of some of the challenges in that space. Do you want to maybe share that with us, please?
Sure. So I think this is something that I think it would be all of our clients really grapple with. And that ranges from your very kind of mature technologies to even, like you mentioned, a lot of the emerging technologies that sound a lot sexier. Organizations really struggle to implement them. You can have the best plan on paper, you can have the best technology, but the failure to implement it correctly, you're not going to get any value out of it. So I think from a digital project perspective or a digital transformation perspective, we commonly kind of pick up 3 core issues that we kind of help our clients walk through. And ultimately, all of them come back down to cultural change. So the first one really looks at organizations need to move out from a siloed work mentality into more of an interdisciplinary kind of collaborative space. So a lot of the time, organizations have silos from a finance department to an HR department to a kind of maybe their client-facing teams. And that often presents a massive challenge in terms of sharing data, sharing insights that might be valuable to other teams, and the inability to almost understand the data sets of other areas within a specific organization become a massive hurdle for any technology set in terms of the formats of their specific systems, the ability to interface multiple systems across different departments. We've seen that as quite a major issue for organizations. Another one is really, and I think this is something maybe that is very applicable to AI in specific, but it kind of also it branches across quite a few technological applications, is really the ability from an organization to move out from an experience-based kind of decision-making framework, is really using their leadership as that decision maker into a space where they're using data to make decisions for them. You have some very smart people often in the room that want their specific decision to be taken forward, and they've got an agenda that they want to follow, even if the data doesn't necessarily align to that decision. So what we kind of have had to help quite a few organizations with is that kind of change in mindsets and understanding when to kind of leverage off their data sets and use the decision or insights that come out of that. The last one that we've kind of really pick up quite often is, and this is, I think, true through and through for finance departments, is really to move out of that rigid and risk-averse kind of mentality into a lot more of an agile and experimental and adaptable space. So you can understand that from an accounting and a finance perspective, there's a lot of risk with getting reporting wrong, or kind of having inaccurate information that's reported, and really trying to find that mid, or that almost balance point of trying to get more agile projects into their pipeline, trying to be a lot more agile around how they test new tech and run it in parallel to their current systems. This has been, I think, a massive hurdle for a lot of the organizations that we've kind of encountered and try to help through their digital journeys.
Great, thank you. I mean, that does give us a good context. Sahel, anything you want to add around that? As an accountant in the profession, can you think of any particular challenge you might want to bring up?
Yes, I think, like Russell mentioned, when we as accountants hear technology, there is an expectation gap where we feel like the technology might replace us or might do all the work for us, so we don't have to do any work. So I think the key thing to manage will be to manage expectations in terms of what the technology can do, and the technology ultimately being a tool for you to do your job more effectively, especially in the accounting space. And also to allow you to actually understand that technology is not the enemy here, and technology will ultimately produce better results.
Great, great. So as a partnership, so technology and the individual doing the work can work together, as opposed
Definitely.
to seeing it as a replacement. Good.
Definitely.
Just before I take, I just kind of ask Russell to add to that. If there are any questions, please do send them through. We have 1 or 2 minutes left where we can take some questions. Russell, you wanted to add?
Yeah, I think I also just wanted to mention, Danny made a very good point that I think is also quite relevant to this discussion is, tech is there to solve a specific problem statement. So you're not bringing tech in for the fun of it or because other organizations have it. There has to be a very specific need that's identified that creates value from that tech application. And I think we did mention it before, but I think when companies put together their business cases to really try and get a piece of tech implemented, that the use cases and problem statements that they kind of define need to be crystal clear in terms of how that tech is going to be used and what value that tech is going to create for the organization, and over what period of time that value will be extracted from that tech.
Great, thanks so much. So it doesn't look like any questions have come through. So let's maybe use the last few minutes just to have closing comments. Dan, maybe you can start, Sahel, and then Russell, if you can close for us.
Yeah. So somebody once said that if you want to make enemies, start changing something. And I think that there may be lots of corporate antibodies, particularly and resistance when it comes to machine learning. And so my suggestion is, given as somebody, I'm obviously very biased and prejudiced towards machine learning. I love it. It's an amazing technology. It's something that has kept me intellectually satisfied and entertained and put food on the table for the last 18 years. It's an amazing technology. And for me, I often find that I have to temper my enthusiasm for it, because otherwise there's a tendency to overwhelm people. And I think that but given that there are these overt benefits to using machine learning in a range of different industries, including in the accounting and finance industry, I think the way to do this is to not go nuclear, but to gradually acclimate an organization to machine learning. Choose small projects which are easy and which will add value quickly. There's lots of low-hanging fruit in the area. And if any company wants to start a particular project in this area, they spend time looking for low-hanging fruit, because I think that's really going to be an opportunity for machine learning to generate trust, earn its trust, and hopefully lead on to further projects where they involve a bit more they involve a bit more commitment on the side of the community and the industry, but there'll already be trust to help them along at that point. So start with low-hanging fruits and go for easy projects.
Thank you. So Hal, we are a bit tight for time, so if you can make it brief, please.
Yes, definitely, Lawrence. I think the main takeaway for me is that recently the CA profession and the auditing profession has come under scrutiny for the ethical components of it. And I really think that adding the technological elements into that makes it more transparent, more effective, and more efficient, which would ultimately result in more assurance for all stakeholders and a better accounting and finance department as well.
Great, thank you. Russell, last comment. Thank you.
Cool. I'll be less than a minute. I think the important thing for me is really that, and I saw a quotation the other week that really kind of, I think, gives a good closing statement, is that organizations can't afford not to have kind of AI and move forward using machine learning and tech that creates efficiency and kind of almost, there's your front runner organizations and your laggards. I think the organizations that aren't adopting tech that has this ability and capability within kind of both finance and the broader organization will become your laggards very quickly.
Right. Thank you, everybody. Russell, Danny, Sahel, thank you for your insights and for contributing to a very valuable conversation. Thank you, everybody, for your time and for listening. And yeah, we hope you enjoyed our chat. All the best.
Thanks for having us.
Thanks, everyone.
Yeah.
Thank you, Lawrence.